Okay, so let me just go here quickly. Just want to check, am I sharing my screen? No, I'm not. Okay, so there were some nice messages that came through this morning when we were doing the accountability. So as always, we're always looking for success stories. So if you've got them, please share them. I do remind you that in the resources, you do have the calendar. So there's a calendar for those of you who kind of want the PDF. So just a reminder, if you go here to the mastermind, and I'll bring it down here for you, and you go to the classroom and you literally go to start here and you go to the resources, you'll see that there's two things here. One is that you've got the cheat sheets on what Anthony was just sharing. So you've got the different cheat sheets just to explain how it works. And you've also got the annual calendar, etc. So it's all here in your resources in terms of that process. Then the next Wealth Weekend is October. So it's the 14th to the 18th of October. A little reminder of why you want to be here. Here's a short video from the one that we did in March. So I just want to say a huge welcome to all of you. It's fantastic to have you here because you're going to get to experience what the top 1% get to experience. Trust in yourself, trust in your plan, trust in your partners, and trust in realizing that there's a community of like-minded investors just like you. Our passion is to help everyone invest like the top 1%, and I wanted to welcome you to the table because I'm sure that for most of your life you felt that you weren't invited to the table. You don't have to have the capability, and you don't even have to have the clarity. All you need to do is commit, and I look forward to your 10x results once you commit and have the courage to follow your destiny. So for those of you who want to join us, I'd strongly recommend you reach out to Shanika now. We're starting to make final arrangements. And then also a massive highlight from March was the personal growth and self-exploration journey. So we're doing that again, the 18th to the 20th. So you can do the two together. So you do the Wednesday to the Sunday, and then the Sunday to the Tuesday. We specifically put it together. And I know for the 9 people who came on that, we got incredible feedback on the personal growth. So if there's anything you want to know about that, please reach out to me. We're talking a lot about the AI, so I'm not going to go into it in too much detail now. But, again, most people are still at this level 1, the question asker. And the aim is that you need to get to the workflow level 4 at an absolute minimum as soon as possible. And you're going to see why now in this presentation, why this becomes so important. And we do have a free course on how to get yourself set up in ChatGPT. So we've literally put that in. Again, if you go to your mastermind, you can go do it. It takes about 2 hours. So if you literally go here, classroom, and it's here somewhere. Where's it gone? There it is. So it's literally a free course sitting in your mastermind for you. Okay. And then I know a number of you are already on the Wealth Accelerator. I'm going to talk about AI Wealth, which we're doing next month. And so the question is always, we sit in our comfort zone over here. AI is dragging us out of our comfort zone, whether we like it or not. And this is where the magic actually happens. And a reminder of whenever you want to leave your comfort zone, how do you do it? You make a commitment. You have to have the courage. You then, you don't have to have the capability and you don't have to have the confidence. You just have to have the right people around you. And something that I'm really excited that we're doing with Yaku at the moment is building the 10X Command Center, which is going to integrate your life, your business, and your wealth. I had a great meeting. Anthony, you and I haven't even had a chance to probably catch up, but I had a great meeting with Dan and Garth last week around how can we actually take this to a whole nother level where you integrate the different components of your life, your habits, your tracking, and everything in between, everything we're doing with our annual, outcomes, and then our monthly check-ins and habits and everything else, your business and your wealth. So it's all being built in to a blueprint and to a system that we can all use on a daily, weekly, monthly basis. For the investor update, so this is the event with Robert Kiyosaki. I know a number of you have already booked your tickets. So if you want to come and join me, that was me last year. This was singularly one of the best things I did last year. About 130 people, the most incredible learning environment with other like-minded investors. And this takes place in America. And then finally, just for those of you who kind of want to know, sort of how our family kind of works and our partnership between the family office and ourselves. We've got core, which is where you master your portfolio, and it's all about getting the systems and the partners. We've then got 10x Elite, which is all around, it's creating the 10x environment where you're working with myself, Anthony, and with Amy to execute and to be able to get results. And then finally, we've got Legacy, which is where it's the full family office done with you. And for those of you who haven't seen, Amy has done some incredible work now with regards to the whole family. So this is the conversation around money. How do you set yourselves up? It's the legacy planning. It's the generational wealth. She's created an entire report. I am going to share the report on the WhatsApp group just so that you can go and read a demo example of it. But if you haven't done this, I strongly recommend that you do this. And, we've had amazing feedback from the people that are actually doing it. So who is your family? What is the money conversation? How do you set yourselves up and your family's path going forward? So it's all there in terms of the process. And then finally, Anthony and I are doing a VIP session on Friday morning, which is, many of you're already in the mastermind, so you don't need to attend. But if you do have a friend or a family member that you would like to attend, it's going to be a workshop where we take them through the process. We explain to them the 6 pillars to wealth. We explain to them, knowing your numbers and how it all works. And it gives them a very thorough understanding of what is the family office, how does it work, how do you turn your business income into investor freedom. So it's a 4-hour workshop. It is by invite only. But if you A, want to attend, you obviously can. And B, if you want to invite someone that you think would find huge value out of that, then please let Alex or Shanika know about the process. Okay, and so without further ado, I will put up the survey while I'm doing the presentation. I always do as just a monthly update. But what I wanted to pivot to was the session now, which is around AI wealth. And this is the super trend that is happening in our lives, whether we like it or not. There's obviously risks to it. What do we do as an investor, in terms of this process? Now, let me stop sharing my screen here because I want to just change my slides. And what we're going to do is I've got an entire presentation that I've put together. But before I go there, and let me get it up here quickly. Anthony specifically, so there's 2 parts to this, which I think are very, very relevant. And the first is that I've put together this entire presentation because our community actually asked. So if you remember, you asked when I asked you what the different things were you wanted on a monthly basis. The first thing you wanted was German property. So we did that last month. The second thing you wanted was AI. And the third thing you wanted was gold and silver. So this month we're doing AI, and next month we're doing gold and silver. And I reached out to Anthony and I said, hey, would you mind actually helping with this? And the reason being, and it's interesting because Bethany and a few others, Nirvana, actually asked this question. And if you look here, this is quite a topic at the moment. I saw this article come out here. Where's it gone now? Sorry, I've just had my computer updated. Now I can't find all my... Where the hell's the PDF thing gone? PDF. Yeah, that is weird. Give me 2 seconds. I just need to find my PDF reader. Why the hell is it not here? Okay, I was not expecting that. Okay, let me do it a different way. I'll go up to here and I'll open it again. Sorry, Anthony. It's open, but I don't know where it's gone. There it is now. So this was this whole article around the Morningstar and the SpaceX valuation and the fact that it was coming out at 1.7 trillion. And this whole Morningstar article was around how, they're 1.75 trillion and how they were only sort of valuing it at 780 billion, significantly overvalued. And it goes on. And I did share this article. It talks about the Anthropic, and what's happening with Anthropic and how, this is a concern and that there's other underwriters coming out, et cetera, et cetera. So what I thought would be very valuable is we can talk about the super trend of AI, but actually what's happening right now as from an investment perspective, from the stock market perspective, was, what do you think is happening with regards to the SpaceX and Anthropic? So, Anthony, I'm not sure how you want to do this. If you've got something you want to share, or if you just want me to run through the questions that I've got, but I'd love to kind of get your take on, how you see this all sort of playing out.
Yeah, sure. I've got one or two or three or four slides that I can
Why don't
happily
why don't
work
we
through.
why don't we pivot to your slides and we run through those, and then if they're not covered in sort of questions, then I'll come back to the question side.
Yeah, sure. It's a bit all kind of all over the place. But I'll try kind of tie them up with respect to those questions. Let me share my screen quickly. Quite a bit of
Would
it.
you prefer me to do it the other way around? Would you prefer me to go question for question and then we go to each slide once we answer the question?
No, let's do it like this. And if you feel that I've missed anything or there's something that you want to kind of ask, feel free to jump in.
Cool.
Um, the I think the biggest discussion at the moment, or one of the questions, was centered around where the kind of opportunity lies in all of this. And I think our our thinking is more aligned to the kind of longer term plays. It's I think it's very easy to get caught up in new kind of services, new topics, new interesting and exciting things. But you need to understand the mechanics of it, because if it's something that can be developed rather quickly, and it doesn't have strong pricing power, it it can essentially be disrupted very easily, right? And I think disruption is probably the key word, and one of the biggest things that we're seeing at the moment. If you look at software businesses, software as a service, they've been under incredible pressure this year, because ultimately what the market has said is that, okay, anyone can do this now. Anyone can generate the software. Anyone can ask some form of AI to create code, and they can essentially build a software business, right? So you've seen software as a service under immense pressure. It was something that was the darling child of indexes. Think of Microsoft, and those kind of businesses for a long time. Salesforce, they were all considered really, really good businesses, and now AI comes around, and the market's starting to ask questions. So I think if you're looking to play this theme for the long term, and you're not looking to do it on a speculative basis, um, you want to probably be looking at the infrastructure that powers all of this, right? Infrastructure is always going to, I mean, you can see it there on the screen, but economically it benefits from scarcity, pricing power, and high barriers to entry, right? You don't just build a data center or a power generator, or something like that overnight, right? It's like you can see there in the risk profile. It's capital intensive, it's long duration, it takes a while to kind of do all of this stuff. And because of that, because it's capital intensive and because of the long duration, it's going to benefit from those higher barriers to entry, right? You can't just have two or three people in your business that are coders or are exceptionally good on AI, and they develop a software that can be packaged and sold, right? So I think that's where the risk sits in all of this, is that part of the market is easily disruptible, whereas the infrastructure stack becomes a lot more embedded for the long term, right? So I think that's perhaps where the opportunity lies. You can see the infrastructure stack is made up of five segments. It's broken down into semiconductors, which obviously your chip manufacturers, NVIDIA, AMD, Micron, Taiwan Semiconductor, all of those kind of businesses uh, would fall under that segment. It's something that's obviously been very topical. Those share prices have run extremely hard, as most of them have in the AI space. But really, you need those semiconductors as your foundation before you can do anything, right? It all runs off those semiconductors. The next one is data centers, which you'll know well, Scott, is I mean, they're the physical home of AI compute. Um, and like we've seen at a lot of points of the infrastructure journey, you've got demand far outpacing supply. And again, that is because of that high barriers to entry and the costs, the intensity of the capital costs associated with these bigger infrastructure projects. Energy, again, it's an obvious one, but it's sometimes an overlooked one. You need energy, you need power to power all of these things. Industrial automation is another one, as well as networking, right? You physically need to lay cables and you need to connect all of this, right? So there's a lot of businesses focusing on that. Connectivity and networking is an ever-evolving landscape. As far as I understand now, they're now doing a lot of that with like actual beams of electricity and light, and physical cabling is starting to slowly fizzle out. But again, you need all of this plumbing, you need all of this foundation to support this whole theme, right? No one can build applications or software on top of this if they don't have infrastructure well laid out. So I think that's where the opportunity set lies. Um, like I said, it's durable value, right? It's hard to disrupt this kind of value. Um, if I jump to the next slide, this this typically deals with SpaceX, which, as you say, I think has been the most kind of topical of late, and really gives us a bit of a playbook how to potentially approach other upcoming IPOs. I think it makes for quite an interesting case study. We have been sitting on the side of caution on this one, um, and there's a few reasons for that, which I'll touch on. Um, Interesting to note, pre-IPO, obviously the IPO, for those that don't know, has happened on Friday last week. Pre-IPO, the valuation was essentially at 90 to 100 times sales, right? Meaning that it would take them between 90 and 100 years at that valuation to recoup the earnings at that to recoup the earnings of that valuation metric, right? This has now dropped to around 45 times sales, and the reason for that is that there are potential future projects in the pipeline which could speed that up. But really, to understand that, you're looking at 45 years worth of earnings in order to justify that valuation. That valuation over the last couple of days has gone up, as I'm sure some of you would have been following. There have been some strong returns posted on Friday, on IPO date on Monday, and last night. So that has jumped even higher. So I guess in summary, when you look at these IPOs, it's important to not just immediately get caught in the hype, but actually understand what you're paying for, right? Actually understand what you're buying into from a valuation point of view. It can be a fantastic business, but it may not be a case of buying it on IPO date at that valuation, right? I wouldn't write off these kind of businesses, but I think it's important to make sure that the price you pay is somewhat realistic, right? And I think that's probably one of the biggest risks with these IPOs, is that you get caught in the hype. Obviously, they sell these things incredibly well. They partner with the biggest institutions out there, and you see all kind of reports coming out on just how bullish people are. Make no mistake, that's by design. That's done to increase the hype. That's done to get people buying the stock. So I think it's very important to view it from an investment lens and not as not from a speculation lens, to make sure that the price that you're paying is realistic. I think that's key in managing this whole IPO environment. There is a quote there from Warren Buffett, which he always tends to have the funniest quotes. And his view is that an IPO stands for it's probably overpriced, um, which which can be the case. And again, back to valuation, just making sure that you understand what you're paying for. It's no surprise that all of these AI type businesses or technology focused businesses are IPOing this year. It's the perfect environment. This is by design. They realize that they can probably get away with the slightly higher valuations, and people will pay up for it, because of what we've been seeing in the AI space. So also just keep that in mind. Um, Back to your point there, Scott, on valuations. I actually have a slide on this. The Morningstar one is on the right-hand side here, but this presentation comes from our partners, that are external consultants to our investment committee, and really what they've done here is they've looked at the IPO price, which values the business at $1.77 trillion. Like I said, that has shot up and is now exponentially even higher. And then they've kind of looked at Morningstar, they've looked at other individuals, and they've kind of said, what do you think the valuation should be? And you can see there's been quite a wide range. One coming in at 1.3 trillion, the Morningstar one coming in at 7.8 billion. And really, if you are participating in these IPOs, right, the gap between where one thinks the valuation should be and what the actual valuation is that kind of margin of safety that you're surrendering, right? You're forfeiting that market that margin of safety. Um, and if there were to be volatility in the share price and it were to come back down to valuations that were maybe a bit more realistic of the business itself, um, that would see that kind of erosion of that margin of safety. And again, to my previous point, you would then be buying in at a slightly more realistic valuation, and that's personally where I think the opportunity exists. Um, Again, I want to make it abundantly clear that I'm not saying that these are bad businesses. I just think you need to be you need to pay a realistic price for it, right? If you're paying these huge multiples, you, I mean, I could be wrong, but you are to an extent setting yourself up a bit for potential losses if share prices correct back down to more realistic valuations. That will take time to unfold. I completely get benefiting from it initially, speculation, making a bit of return, selling it. There's absolutely nothing wrong with that. But again, if you're going into this for a long-term investment, just be cautious of the price that you pay. Um, Interesting kind of layout of what the first few weeks could look like, and it not being about fundamentals. I think everyone knew that SpaceX was going to go this way. I mean, it was oversubscribed. The demand was huge. The supply was actually very limited in terms of what is actually available for outside shareholders. So I think this initial kind of frenzy was definitely expected. A lot of that boils down to the scarcity. The free float of 10% means that very few shares are available. And when demand dwarfs supply, price move fast. Exactly what we've seen over the last couple of days. You've got everyone wanting to get involved. Remember, Elon Musk has a strong cult-like following. There's a ton of people that buy into his vision. I think he's an incredible salesman. So you've got a lot of people fighting over very few shares. Um, Secondly, the retail demand, there was a very high component allocated to the retail market, i.e., not the major banks already selling this off to their ultra high net worth clients before it even listed. So 30% of that float went to retail investors, which is 3 times normal. And again, that creates that kind of enormous buying pressure from day one, which creates that kind of frenzy in the market. Everyone's trying to buy it, everyone's been told to buy it, and you get that demand far outpacing supply. Musk's following, I've touched on that. Huge following. A lot of people buy into his vision. And then the fourth point there, which I've actually got more details on the next slide, is the inclusion into the various indexes. I think that is a crucial component to all of this. So much so that some indexes have been altering their rules of late to try and make room for these bigger IPO events. Not just SpaceX, they're doing it ahead of the others coming down the pipeline as well. When one thinks of indexes, so what I'm talking about here is the Nasdaq 100 or the S&P 500 or the Russell, whichever index it might be. Remember that these indexes at the end of the day are businesses. All right. They're trying to get people to buy into the index. They're trying to get people to trade on their exchange. They're trying to get managers or fund managers to benchmark against these indexes, because at the end of the day, that's how they derive revenue. There's a cost to all of this, right? So these indexes at their core are businesses, right? They have rules in which you need to achieve in order to be included in these indexes. And in some cases, they will rewrite the rule book. They'll rewrite the playbook to make it more accommodative to new IPOs to get into their index. So the 3 indexes in question here are the Nasdaq, are the Russell, as well as the S&P 500. You can see there on the far right that in May 2026, like I said, very recently, the Nasdaq changed its inclusion rules. And as a result of that, SpaceX is able to enter the Nasdaq 100 after just 15 trading days, right? That will trigger a huge buying, a huge demand. And the reason for that is because your Nasdaq trackers like Triple Q, which is a firm favorite amongst the whole world pretty much, are now forced to include SpaceX within the Nasdaq 100, right? If they meet the criteria, they get included, and there's a huge pot of money that now has to enter that share, right? They do not care about the price that they're paying for it. They are completely agnostic. On that day, they will be forced to buy uh, a position in SpaceX, right? Interestingly, the S&P 500 also went into a kind of period of debate and revisited their rules, and they did not end up altering their rules. They rejected the fast tracking of SpaceX. They maintained their 12-month seasoning period as well as GAAP profitability requirements. So the likelihood of SpaceX entering the S&P 500 before the year is up is zero. They will have to wait out that 12-month period. Interestingly, one of that GAAP profitability requirement means that for a company to be included in the S&P 500, they need to be profitable in their previous 4 quarters, right? So SpaceX will need to be profitable over the next 4 quarters, as well as the quarter prior to being included into the index, which would obviously be quarter 4. So I don't know if you guys know this, but SpaceX is actually not profitable. They don't actually make money. So it's going to be an interesting one for SpaceX if they want to get included into the S&P 500. They will need to be profitable over the next 4 quarters. And then they will open up the potential door for inclusion in the S&P 500. The S&P 500 is by far the kind of flagship index that companies want to get into, right? The money, the size of allocation in the S&P 500 is huge. Yes, it's big in the Nasdaq and the Russell, but the bulk of the money definitely sits within the S&P 500. Moving on to the lockup and unlockup schedule is another important one. As I said earlier, the free float sits at about 10%, which is actually very low. What that essentially means is that 10% out of 100%, so there's 90% locked up, right? What I mean by locked up is those shares will be owned by employees, they'll be owned by Musk himself, other board members, and people aren't actually allowed to sell those shares. So the only availability was that 10% free float. That is actually one of the key rules that the Nasdaq ended up changing. Previously, they had a float requirement. I think it was 12.5 or 15% as the minimum. And again, they dropped that down to 10% purposefully to include SpaceX, because they obviously wanted it in the index. But as time ticks on, a lot that remaining 90% starts to free up, right? And here's the kind of timing schedule for that. So quarter two earnings, day two, which was Monday. The existing investors can sell up to 20% of their stock, starting the second full trading day after SpaceX releases its first earnings report following Q2. There's a note there that Elon Musk and significant insiders face a separate 360-day full lockup from listing, but the remaining employees can already then start to sell a bit of their shares. Days 70, 90, 105, 120, 135, some more incremental unlocks as time goes on. Shares unlock in increments of 7% at each of these intervals following the public listing. Each unlock is a potential source of selling pressure. That's really where the whole focus starts to move to. At IPO, like I said, you have very limited supply and a lot of demand. But as time ticks on, supply starts to increase as people are able to start selling their shares, right? Employees been working here for years and years and years have essentially had illiquid shares over that period. They've now got this liquidity event. As we know with IPOs, there's two reasons why you IPO. One is to raise capital for further expansion. Two is to actually get some money back on your shares, right? You've been working at this for a long time, illiquid market. Now you finally got a market to buy these shares. So as time ticks on, you'll see more and more supply into the market, which essentially raises the risk that supply will then start to outstrip demand, and you could potentially see some volatility in share price. Alternatively, the market just laps it up and they just buy all of it, and the share price continues to go higher. Unfortunately, I don't have a crystal ball to predict what that future looks like, but I think it's important to understand this, as it is important with any IPO, to just understand exactly what you're buying and how this all can potentially unfold. Another major unlock after quarter three earnings, an additional 28% of shares unlock once SpaceX reports its Q3 earnings, and then a final unlock on day 180. The remainder of all shares unlock 180 days post IPO. So again, another major event where you'll start to see this increase in supply hitting the market. What that looks like is will be yet to see. But to my point earlier, I think if one is patient, you could potentially see some better entry points in the future. That was it on SpaceX. Scott, I don't know if there's any questions there.
Let me
This
just
next,
sorry, just before
yeah.
you pivot. So Shona did say about buying shares in the S&P 500 and whether it was overvalued by the hype. So I think hopefully, Shona, your one was answered. Ben asked in relation to through which channels would you recommend buying into these IPOs or AI companies?
The IPOs have been tricky because you need to get allocation to them. I think that to avoid the headache, it's better to just trade it on the market when they become public, right? So you get that kind of pre-IPO. People are all trying to get their hands on some shares. And then you get it actually gets listed on the exchange, it starts to trade, and then you can essentially buy it. So I would imagine from wherever your trading account is, you could just purchase the shares. So yeah, no specific place. It's like I said, it's very tricky to get access pre-IPO and to get the actual IPO price. It's I wouldn't say almost impossible, but typically a lot of the US institutions get first dibs on that. But as soon as it becomes available in the market, as soon as it trades, then you can theoretically pick them up anywhere.
Okay, and then Jeff said, yeah, Anthony, thanks for dissecting SpaceX and other IPOs. It makes sense. The company is real, the business is real, the valuation is not. Reminds me of the Tesla shares based on sentiment and cult status, but the numbers don't compute. The unlock
Yeah.
process will be the acid test, 2 cents from a five. I assume he means Enneagram 5.
Yeah, and I mean, like you've got Musk's now running two listed companies. Like, yeah, I'm sure he's got a big team, but geez, that can't be easy. Um, does he drop the ball somewhere? Maybe. Do we see SpaceX acquiring Tesla at some point in the future, potentially? Just kind of wrapping it into one conglomerate. Yeah, a lot of question marks as you can imagine, and not all the answers to everything. Um, but yeah, fascinating times.
Before we move on to the next one, just Bethany had a question earlier when you were talking about semiconductors and said, what are the companies where these big firms, NVIDIA, Taiwan Semiconductor, get their goods to be able to create the chips, the players behind the semiconductor companies to allow them to make the chips?
Yeah, it's a good question, and probably kind of dives into the resource route around metals and things like that. So I think that is potentially another way to play it. I guess there's layers to these things, right? Like this, the whole supply chain of something like this is massive. Um, so where you kind of decide to come in or come out or have your exposure is obviously entirely up to you. Like I said earlier, I think the infrastructure space, given its pricing power and barriers to entry, is probably a more longer term way to play it out. But like Bethany says, you could definitely make an investment case around um, the actual components that go into these chips, the metals, those kind of things. Yeah.
Awesome. Okay, let's keep going, Anthony.
Um, One thing I did want to add on SpaceX, which was also quite interesting, was to see the kind of the volatility in the rest of the market leading up to IPO. It's important to know that when these IPOs come to market, you need to have money to buy it, right? I mean, we make the assumption that everyone's just sitting on mountains of cash ready to buy IPOs, which isn't the case, right? So they need to sell assets to to generate the liquidity to partake in these IPOs. And it was interesting to see the pressure that Bitcoin was under leading up to the IPO. I don't know if any of you guys would have seen or noticed that. I'm sure you would have. But you saw a lot of selling pressure in the crypto space because it's a liquid asset. It typically it kind of carries that futuristic element that SpaceX carries. So I think a lot of Bitcoin investors were looking to kind of get their money out of Bitcoin and chase the next big thing. So it's interesting to see that, and it will be interesting to keep that in mind leading up to the other IPOs. The valuations that these businesses come to market at is essentially what the market needs to pay up for, right? And they need to get this money from somewhere. So that typically comes from the most liquid positions and positions that have previously done well, right? I've got a position, it's done well, it's generated good returns. Let me take profit and let me allocate to something like this. So it can be quite a disruptive factor on markets. And when you're talking these kind of numbers and the trillions for all of these, it can sap a lot of money out the market, create selling pressure for people trying to get liquidity and then go into these IPOs. So again, another interesting kind of dynamic to keep in mind that one could see some volatility leading up to IPO events, and then the dust settling a bit after that. This next slide, it talks to the previous picture that I shared during the market commentary, and just the kind of weighting of technology in both emerging markets as well as the S&P 500. And the question was centered around what kind of exposure are you getting to AI? Not necessarily SpaceX. We've spoken about the SpaceX dynamics there, and their inclusion into indexes. But what kind of exposure are you getting to technology and artificial intelligence in general when it comes to an index? And again, to my point earlier when I was answering Evan's question, you can see here what I've done is I've just taken a few of the bigger indexes, the S&P 500, the Nasdaq, MSCI World, emerging markets, as well as Euro Stocks 50, which is the 50 biggest shares in Europe. And I've had a look at their allocation to the different sectors. And you can see at the top technology, as one would expect, Nasdaq occupying a huge chunk of that, given its technology bias there, or typical technology allocation. You can see S&P 500 probably hovering at around 30, 35 odd percent. MSCI World a bit more diluted at around 28. Emerging markets slightly higher than the S&P 500, to my point earlier with that chart. And then you can see Euro stocks, Europe sitting at the lower end of that, which again makes perfect sense why those indexes have been on the back foot a bit of late in this kind of technology boom environment. You've seen a bit more muted returns there, and that's because of their lack of exposure to technology businesses. The biggest one there would be ASML, and that's their kind of flagship tech business. When you look at these numbers, one should also look at it with the inclusion of communication services. You are seeing a lot of kind of AI businesses in that communication services space, and when you add the two together, you start getting up into those kind of 40s, low 40s for the S&P 500 and emerging markets. Probably 60s, 70s for the Nasdaq, which is what you would expect out of a tech-heavy index like that. Good source of return, also can be incredibly volatile. MSCI World probably coming in at around, I would say 35 to 40 odd. And then you get the rest of them, i.e. Euro stocks with a very low exposure. So to answer that question around what are you already getting in these indexes, the answer is a lot. You're already getting a lot of exposure there. And I think these numbers, provided that technology continues to accelerate and returns are made, they naturally start to get bigger as time ticks on, right? That's how these indexes work. The higher the share price, the higher the market cap of these companies, the bigger the percentage that they occupy in the indexes. So you are already getting a lot of exposure through this. Some people think it's too much exposure and it makes them uncomfortable. Some people are happy with it. Others perhaps want more. But just know that through the indexes, you already are getting a high component of technology. As we've discussed with regards to IPOs, each index will have its own rules around inclusion. But you will typically see these IPOs making their way into indexes in due course. As we said, Nasdaq 15 days. The Russell is actually 5 days. They also changed their rules, 5 days from listing, and then the S&P 500 will likely happen within a year, provided that SpaceX can get profitable. That is a big uh, question mark. Um, so yeah, that kind of gives you an idea around the exposure that you could have already. In most cases, it is high. I want to just check if I've got any other. No, that's my last slide.
Anthony, just quickly in terms of Anthropic and for those who don't know, Anthropic's the holding company of Claude. What's your sort of viewpoint on on just their sort of up and coming IPO, etc. I just before you give me your input, I'll give you mine once you're done.
Look, again, I think on in conversation, great business. How can it not be fantastic? It would be the kind of general consensus. But going back to valuation, I think it's going to be incredibly important to understand what you're paying for, right? And I think an exercise needs to be done pre-IPO on each one to really understand exactly what you're paying for and the price that you're paying for it. So as far as I'm aware, I don't think those numbers or metrics are available just yet, but it will be a similar exercise. Understand what you're paying for, understand what their free float looks like and what's actually coming to market, understand what the supply looks like going further down the line, and really do an independent analysis per business. Avoid the kind of hype of saying AI business, I know the name, it's a household name, must be good, right? Businesses can be fantastic. They can IPO at ridiculous valuations. They can potentially come down uh, in the future, and you may very likely get another kind of bite at the apple at a more attractive valuation. That for me is probably the biggest risk around IPOs at the moment. Is just not getting caught up in the initial hype and just making sure you understand the business and make sure that the valuation you pay is justified.
Because I mean, I'm looking through the questions that kind of are pre-prepared. You've pretty much covered all of them, and I think even this last one, which was the only question I was going to ask, which was sort of what are the biggest mistakes investors are likely to make over the next 2 to 3 years, and the reason I asked the question, and specifically in the AI space, is everyone's talking about how dramatically the world's going to change in the next 3 years around AI, etc. And what I'm hearing from you is primarily don't get caught up in the hype, like stick to the fundamentals. Would you agree with that?
Yeah, I would agree with that. I think, look, it's so hard because of how not futuristic these businesses are, but because their revenue and earning sources can be, I mean, that could be nothing, and then they can land a contract and it's absolutely huge, right? I mean, think in terms of SpaceX. If all of this kind of if they can get all of this futuristic stuff right, domes on the moon and what do you call it? Power plants and server rooms and all of this kind of stuff. It sounds far-fetched. If they can get it right, then I guess these kind of valuations won't matter. But until they get it right, I think it's important to understand what you're paying for. Um, it's really easy to get caught up in a story, right? It's really easy to kind of go down that rabbit hole and buy into it because it sounds fantastic. And again, to my point earlier, these are great businesses. There's nothing wrong with these businesses, and I think Jeff said it incredibly well. Just make sure that you're not kind of overpaying and then they have one bad earnings report, share prices plummet back to reality, and you're caught on the wrong side of that. Rather be that person that comes in at a later stage at an attractive valuation.
Cool. And then Bethany said, when Anthropic appears in terms of an IPO, will this drive SpaceX up?
Um, sure, potentially. I think it's all going to depend on the dynamics of IPO and prices and demand and things like that. Um, yeah, it depends on liquidity. Again, back to my earlier point. I mean, there's not mountains of cash just sitting around waiting for IPOs. People need to sell stuff. They need to have good reason to sell something. Um, yeah, if the demand is there, which I've got a feeling it will be, you could see sharp share price movements that in turn benefit SpaceX. But each IPO will have different characteristics. That's the point I'm trying to make. You can't just kind of put a blanket across all of it and say, oh, it's all AI, must be good or must be bad. You need to understand each one individually.
Well, I think it's let me because I know you're conscious of time here, so I just want to finish with one sort of, let's call it the elephant in the room, and that for me would be, if you look at the late '90s and the whole internet dot com boom and then bust, and there was some crazy IPOs in those days, and
Mm.
do you see any correlation between what's going on, sort of internet 30 years ago, AI now, and then suddenly these massive IPOs? Like for me, it feels like a similar trend. You know what I mean? I don't know. I'd be interested to know what your takes are on that.
Um, Look, I won't go into all of the details, but there's been a ton of research and commentary out about this, that exact kind of feeling that people are getting. Um, and the outcome is no, it's nothing like the dot-com crash of the late 90s, early 2000s. The dynamics are different, the environment is different. The valuations are very different. Despite us thinking that valuations are high, they're actually nowhere close to what they were. Um, IPOs they've got substance. Back then, kind of every Tom, Dick, and Harry was just IPOing because of the environment, substance or not, business model or not. Whereas I think now IPOs are actually there's substance behind it, right? You might be paying a higher price for it, and you might not agree with the valuation, but there's still a business there, right? You just need to find the valuation that actually makes sense. So I think it's very different, and I don't think any kind of conclusion should be drawn to that, and I don't think it's a preempter for a market crash or anything like that.
Okay. Well, I'm glad we dealt with that. So thanks for that. I mean, I always say, Claude's making money out of me right now. SpaceX would be making money if I could bloody rent one of those.
Yeah.
What I mean? So I don't talk about anyone else. I talk about me specifically making.
Mm.
And I know there's many millions of people like me that are paying. So um, what's the rush in IPO coming to the market? Almost the desperation to get out there while the liquidity is good. I assume, Rail,
Yeah.
that was answered in terms of that timing that Anthony showed you.
Yeah, absolutely. I mean, this is the perfect environment for it. Now everyone is just rushing to get to market. I think SpaceX nailed it in that they got there first, um, and they were able to kind of attract a lot of the liquidity. I think as time goes on, people are going to have to scratch around a bit harder for liquidity. But to my point earlier, Rail, if you're an AI business, the time is now, right? It's the perfect storm. You've had this technology run. Everyone's talking about AI. Everyone's using AI. They understand AI. AI has been around for a long time. It just wasn't really adopted, right? Now is the time where you can add a few zeros to your valuation, and the markets will probably not even flinch, right? They'll just brush it off. So remember, these guys are IPOing. They want to raise capital and they want to exit. Shareholders want to exit. They want to get some money. Maybe not Elon Musk, given that he's got so much of it, but make no mistake, the rest of those employees in that business that have been sitting on SpaceX shares for the last 5, 6, 7 years, this is payday for them. And I think that's what you're seeing across the whole kind of AI ecosystem is all of those factors mushed together, and it's creating the kind of perfect storm for an IPO.
Awesome. Anthony, so much for that. I think where's God, sorry, these questions keep coming up. Okay, last question and then we're done. Okay. So God said, do you feel that now is the potentially a good time to buy crypto?
I don't know, to be honest. Liquidity crunch was by far the most obvious on crypto over the last couple of weeks leading up to the SpaceX IPO. Um, I wouldn't be surprised if you see the same kind of dynamic playing out for the next IPOs. IPOs aside, looking at the price, it probably becomes more realistic to be buying at these levels, right? Relative to history, relative to all-time highs, you are coming in at a significant discount. So I don't think it's the worst idea. I just worry a little bit, having seen what happened leading up to this IPO, what could potentially happen with future IPOs. Um, but yeah, I mean, you're still buying, I would imagine, you're buying at low levels, right? I think Bitcoin peaked at 120 odd $1,000 a coin. You're now sitting at pretty much half that. So you are coming in at a discount. So I suppose if you viewed it with that lens, um, it would make sense.
Awesome. Anthony, thanks for the fascinating insights. Really, really appreciate it. The timing couldn't be better in terms of what's happening with SpaceX and everything else in the AI space. So deeply appreciate it. I'm now going to pivot into a whole presentation around, what to do and how to take that. But I really appreciate everything you've given us in terms of the investment insight of it. It's been absolutely fascinating. And I've loved some of the correlations that I didn't pick up, like where you said Bitcoin's gone down because of IPO. Like I didn't actually join those dots.
Yeah, yeah. Cool.
Awesome.
Glad it was helpful.
Thanks so much. Cheers,
Nice.
cheers.
Cheers, guys.
Okay, let's pivot directly into the rest of the presentation. So what we wanted to look at here was around the whole AI space and wealth. So we call it AI wealth. And you've got the super trend that's happening, the risk and the investor playbook. Now, again, we're not having a technology talk here. We're wanting to look at what does this mean with regards to your own wealth, your own business, and then what do you do as a leader in terms of this process? What Anthony just said there was low adoption in AI. 10 years ago, AI existed and most people didn't know about it and sort of sat at the edge of the economy. And now it's literally involved in how every company is starting to operate, how capital is being allocated, how productivity is created, how your risks are analyzed, and ultimately how your wealth decisions are actually made. The opportunity that, is enormous, but we also need to be very caught and be very, very careful of being caught up in the hype and not overpaying for the story. And I think Anthony's gone into that in a huge amount of detail. And then also what tools can one use, to build, but specifically you've got to have the right frameworks to be able to do it. So the intention today is simple. I want you just to leave with a clearer view in terms of AI, and as an investor, what do you do about it? As a business owner, what do you do about it? And then specifically with regards to your family wealth, what do you do about it in terms of that process? Now, the question we've got, and we need to all ask ourselves is, whether people used to ask whether AI matters. Okay, that debate is over. And I quite enjoyed what Anthony said there when I asked him the elephant in the room. Is this the same as the internet kind of .com bust boom? And it was no. And the reason being is because it's built on substance. So the real question that we need to ask ourselves is, therefore, it's happening. How do we position ourselves intelligently? And, there's always going to be people, like me that have been very impressed by AI. There's going to be people that are very scared by AI. There's going to be people that are kind of chasing the AI returns. And then there's going to be people that are using AI with discipline. And the winners are not going to be the people who can speak the most technical language, etc. They're going to be the people who actually understand what AI changes. Okay. And they're going to understand where the value is being created. They're going to understand what is overpriced, and they're going to understand how it can improve businesses and ultimately make better decisions at a personal level. Technology doesn't reward those people that are impressed by something. They reward the people who learn how to use it, how to price it, and how to lead through it. So let me say that again. You're going to be rewarded if you learn how to use it, how it's priced, and ultimately how to lead through it. And that's the whole purpose of what we're wanting to go through here. By the end of the session, I'm going to take you through 3 lenses. So with the AI goggles on, 3 different lenses. The first is, what is the super trend? Why is it changing business, infrastructure, capital markets, and productivity? The second is the investment discipline. Where is the opportunity real? Where has the price already run ahead of reality? And the third lens is the wealth architecture. How can you use AI to ask better questions, prepare for better advisor conversations? So when you're talking with your family office or your financial advisor, how can you understand your exposure, and how can you improve the quality of your decisions? The goal is not to become a technologist. The goal is to become a better capital investor, an owner, and a decision maker in terms of that process. So the journey we want you to move through is from hype and headlines into a practical investor playbook. So what are we going to do? Everyone generally starts with shock. Okay, why is AI different from the previous technology waves? And then we're going to move through to the signal, which is, what is the data actually telling us underneath the noise? Once we've understood the data, we're then going to look at the discipline. How do investors think about AI without getting caught up in the FOMO? So this is, and that's why I really appreciate all the value that Anthony's already added to that. And then finally, we're going to move into leadership, which is, what do we do as business owners, as executives in corporate businesses, and or as investors, to be able to make the better decisions for ourselves. And then finally, we're going to bring it all back to wealth. Sometimes people say, well, Scott, you're getting caught up in this AI thing. I'm like, I'm not. It's tied to our wealth and what we're doing, and how AI can actually practically help us build our wealth operating system. So the intention today, and everyone's at different stages in this journey, but as investors and as part of our mastermind, is to take people from this whole fascination around AI to what do we actually do from an action point. Now, AI is not just another app, okay? It is the first mass market technology that can help ordinary people think, create, analyze, and decide at a much higher level. So software helps us automate tasks. Think about it, spreadsheets, CRMs, platforms, dashboards. They all helped us just do stuff better and faster. But AI goes further. It helps us read, summarize, challenge, compare, draft, plan, simulate, and ask better questions back at us. So actually work with us. This is a completely different kind of leverage in terms of that whole process. But the gain is not simply knowing what is the next tool that you should use. I mean, literally anyone can get on ChatGPT or Claude or anything else. The gain comes when you're a leader and you learn how you can redesign your workflows in your business, you can redesign your decisions, and you can redesign how people actually use the information. That's where the real value actually sits in terms of this overall process. Now, there's 2 people that I wanted to bring up for you. And I'm going to put both of these in the WhatsApp group. And if you're watching the recording, I'll put them down below for you. And there's articles that I've already shared with you. Now, this person, Peter Diamandis, is one of the people that I've been following for a long time. He brought this book out, Bold, which came out in 2015. And he's one of the most positive people out there around technology, how it's changed the world. This is an old book now. It's 10 years, 11 years old. But I would strongly, strongly recommend reading this, or probably not necessarily reading it anymore because it's 10 years old, but following what he said. Now, I'm going to bounce around and I'm going to show you some stuff here, because our job at the Mastermind is to help you find the information quickly so that you can you don't have to go and look for everything. So Peter Diamandis is one of the best in the world. He's a super positive guy. I would strongly, strongly recommend following him in terms of the process. So this is an article that literally came out in the last week. You can see there June the 9th or 8th, whatever date that is. And it talks about a massive problem that we've got with the youth of today, and he talks about where generally massive revolutions in the world have taken place where the educated come into the market and they can't find employment. And he goes through the entire article. You can read all about it, why AI is going to make this a reality. What do we need to do about it? And then finally, down the bottom here, we radically need to restructure education. So, in the old days, you went and got a 4-year degree. It comes out of it. It costs you $150,000. And now it's effectively irrelevant. And he went on to actually say there's a really, really interesting stat up here where 6 months ago, something like 24% 24% of code could be done by AI. Now it was something in the region of 70 or 80% could be done. And they were literally saying like a software engineer is no longer be needed. But what's important here is if you look down here, education needs to move towards human skill that complement AI, judgment, leadership, creativity, physical world expertise, and entrepreneurship. Second, we need to accelerate job creation, not just wait for it to emerge. So what do we do with the whole government in terms of the process? And thirdly, we need honest public conversations around it. Now, something that I thought for particularly that are parents, and I just want to come down here to what it said here, because he talks about the 24-year-old graduating. Here we are. It was the 76%. There we are. So this labor market. So it's gone from now 76% of programming can be done by AI, and it's up from 26% just 6 months ago. And he says, software engineering is literally the canary, how they talk about, it telling you about a trend. Legal research, financial analysis, medical diagnostic, content creation, customer support, consulting, translation, accounting. The list of knowledge work categories where AI performs at or above entry-level human capability is growing every quarter. These are the ones that are going to get hit the hardest. Okay, so I would strongly recommend reading this article. And just to put this into perspective here, it's the first article that I've seen with Peter Diamandis, and again, I've been following him for more than a decade, that's actually come out where he's saying technology is a problem, and what are we going to do about it in terms of the way forward. So he talks about young people. I have shared this, on the group already, both for yourselves and for your children. I would strongly recommend reading this article because it really is important and how this labor disruption is impacting us and how it's not going to take decades. It's literally happening in months. And there's a lot of talk around how this is all going to happen in the next 6 to 36 months. So we're not even talking years here, in terms of the process. He then goes on to say the first pressure point, who did everything, so the students that are taking on debt, they've entered the system and found that they can't get into the market. And he talks about the grand disruptions around the world. And like I said to you, there's 3 things we have to do. We restructure education. So we really need to focus on what our children are learning, both at school and at university. We accelerate job creation, specifically with entrepreneurship. And then we need to have public conversations around timelines. For investors and business owners, the message is clear. Build AI capability now, but also build human relevance, judgment, leadership, creativity, and entrepreneurship. AI wealth requires social awareness, not just portfolio awareness. So that's that article. The next article, which I literally watched yesterday, is from a guy called Ray Kurzweil. Now, Tony Robbins interviews, I assume you all know who Tony Robbins is. Ray Kurzweil went and interviewed Ray Kurzweil. Now, what's interesting with Peter Diamandis and Ray Kurzweil is that they started Singularity University, which is the top exponential university in the world. I actually had the privilege of doing an executive program there in 2015. And in this interview, it's about an hour-long interview. And again, I'll share the recording with you. But Tony Robbins actually interviews Ray Kurzweil and really gets an understanding. So just as an example, Jeff, you asked about quantum computing as an example. He actually talks in this interview about quantum computing and how he doesn't see it being a significant thing because of the large language models. And again, I'm not going to talk techie today, but the fact that it's growing so massively in terms of this process. And what he basically said is that most people only think in linear lines. And again, I have a whole talk on exponential technology, but how AI is moving on the exponential curve. Kurzweil's core message is that humans systematically underestimate exponential change because we're wired to think linearly. He forecasts human-level AI. So that's where AI will be better than humans by 2029, which is close to the current, it's going to have a massive impact on our business, our career, and our investment decisions. Now, some people say, oh, but Scott, he's just a forecaster. Do you know that he wrote a book in 1999 where he had 147 predictions? Okay, and to date, 86% of them have been accurate. So he looked at the internet, he predicted the internet, he predicted smartphones, he predicted self-driving cars, and he predicted AI-powered search. And at the time, everyone thought it was unrealistic. So when he came out and he said by 2029, so remember in 1999 he did this. He said by 2029 that AI, okay, so will be better than humans. So that's the year. He calls it the singularity year, which is where AI becomes more powerful than humans. And he predicted in 2029. Now, do you know, even when I did the course back in 2015, and he was talking about AI, he's seen as the grandfather of AI. I was like, yeah, dude, I'm not sure about that. And yet now we're in 2026, and at the pace that AI is going, can we all see that actually the next 2 to 3 years is not that far away anymore? AI can already evaluate millions of possibilities far faster than human teams. They're changing drug discovery, research, health, education, work, and decision-making. The long-term direction is not just automation, it's augmentation. So that's where human intelligence gets amplified by machine intelligence. And I know some of you will get scared by this, but they're actually talking about putting microchips in our brains, and basically we'll have our human intelligence and artificial intelligence all working together. The investor implication is simple. The opportunity is enormous, but the winning skill is disciplined positioning, not blind excitement. So the edge belongs to people who combine exponential awareness with disciplined wealth infrastructure. And I want to actually share with you this video. It's an hour-long interview, but I want to share with you 6 minutes of this video, because Tony Robbins asks him specifically about wealth and what do we do about it, and how these changes are going to take place. So it's at 32 minutes, 46 seconds if you want to go watch this when I send you the recording. But I want to play this live for you now.
Where do you see job displacement in this area? Recently there's been a lot of talk about 100,000 jobs in the last 2 years have disappeared. A lot's been blamed on AI. Some people say it's not really AI. Of course, it's going to create new jobs, but the big difference, obviously, is how fast this will happen. What do you do in that 3 to 10 year period when there's so much disruption so fast? Long term, it's pretty obvious it'll be very good. What do you think we do as a society to deal with that?
What's going to happen with AI is it's going to create tremendous wealth, and society is going to become much, much more wealthy. And I've got a chart that shows actually this has already happened.
Yeah, we'll put that on the screen for people.
If you look at the average amount of income that one person has, this is an average.
Yes.
So everybody benefits from this, is multiplied by 10 in constant dollars.
Right, you're dealing with inflation, it's still constant all the way up.
Yeah. As multiplied by 10 over the last 100 years. So that's what's happened from automation in general.
Yes.
AI is going to bring tremendous amount of automation, so it's going to keep going. So there's going to be a lot of wealth. If you consider at a lot of time, if you lost your job, you had nothing to provide. It wasn't just a matter of losing your purpose. You were not able to live.
Feed your family.
You could not buy food. You couldn't have a housing. You had nothing. You would be desperate. You probably wouldn't live.
Yeah.
The first time we got government involved was with Social Security in 1930. So that's like 100 years ago. Before that, things were horrible.
Yeah.
Now we actually have tremendous amount of wealth. And despite disagreements on how to use that, the society is going to be wealthier, and we're going to be able to provide purpose, and people are going to be able to be much more creative and generate all kinds of things. And if you ask people, okay, would you like to go back? The answer will be no, because they're constantly using it and being creative with it, which they otherwise couldn't do.
So do you see that wealth being distributed by way of a UBI type of tax distribution, tax on robots?
I think we will have UBI.
Pardon me?
I think we will have UBI. And that's just a way of providing a basis, and people can actually live on that.
And then they go find something creative to do that hopefully they earn as well for additional aspects of their life. But the foundation is taken care of. It's that idea.
Yeah, and we're kind of doing that. It's not a very elegant way, but I talk to people that are dependent on this. There's food stamps that you get a credit card and so on. People aren't starving. And this will actually go into high gear as we go forward.
Do you think with the number of jobs perhaps that to get displaced, will the government need to enter in and do something at what tempo? Is that a year from now, 2 years from now, 3 years? Because government's always behind, right, the innovation that happens in society. So there's going to be disruption. There already is some disruption, but major disruption. When I talk to people, they all have different varying views, but they all tell me within 36 months, some say within a year. What is your view of things? How soon before the government would have to intervene because things are done more efficiently?
I don't think there's going to be violence. I think it's going to be disruption. It's not going to be clear how we deal with it, but we will deal with it because people will demand it, and will have the wealth to do it. And that was not the case before. Before, if you lost your jobs, certainly before 1930, and 1930 was just the beginning of government involvement.
Right.
You were extremely desperate, and probably couldn't survive.
Right. I understand. Well, we saw what happened, during COVID. The government stepped in, but we keep accumulating more debt. Do you see us, because of this productivity, are we able to pay back our debt? Does GDP grow so much that we're able to deal with the massive debt we've dealt with? Because we're carrying over $1 trillion a year just in interest payments right now, right?
Well, the massive debt is in relationship to our GDP. If the GDP is increasing, and we're actually not increasing the amount of debt that much, so the GDP to debt ratio will go in the right direction.
Because we'll be so much more productive.
Yeah.
I understand. That makes sense. What would you tell a young person right now? Years ago, you told a young person, hey, go study software, be a software engineer. That was the guaranteed job. And as we both know now, they're not hiring a lot more software engineers, not when some of the best guys are using Vibe and now, you don't even need that. Agents will do it for you. What would you tell a young person today who's trying to figure out what they're going to study, what they're going to learn? Somebody's in high school or about to go to college. The experience of college right now, I read the other day, we have a higher level of unemployment for college students right now for the first time in 50 years than high school students. High school students have a lower level of unemployment right now. So many of those white-collar jobs have already disappeared. So what would you say to them? What should they be focusing on? What should parents be telling their kids to focus on?
They're not that upset, and they understand what you're saying. And I would advise them to learn how they can be creative using the tools that are available and coming out every month, and different ways you can be creative and find something where they can really be a turn on. And a lot of people will find ways of marketing that through the internet.
Yes. So finding something they're passionate about, but using the tools of artificial intelligence or robotics. In other words, using the modern tools to create a modern life, basically, and not settle for a traditional education. They're going to have to be self-educated, it sounds like. Is that fair to say?
Yeah.
Yeah. And what about your kids? Well, you said, how do your kids or grandkids use AI right now? What is their use of it? You mentioned your 11-year-old was...
Well,
So, I mean, we can watch this whole article. You know, I strongly recommend watching the whole thing. They talk about robotics. He talks about nano computing. He talks about quantum computing. He talks about, but by the way, there's some other, which I haven't watched yet, but will AI replace doctors? What is coming? The brutal truth. But what I like about Tony Robbins, he's gone out, as always, and interviewed the best in the world in terms of the space. So I just thought I would share that little video with you, because it's very, very useful in terms of understanding. But again, what's going to happen? Automation, wealth, opportunity in terms of the process. This is a picture of me at Singularity University in 2015. Since then, I've been doing a presentation on the 8 technology trends, how they are interacting with the 8 societal trends, and then, you know, overlaying that with the 6 mega investment trends. Just by the way, if you haven't watched that, just type in there 8 trends for me. I'm just interested if you haven't watched it, or more importantly, if you would want to watch it again, because with everything happening in the world, things like AI and whatever, they are one of the trends, blockchain and a whole bunch of other things. But I get the feel it's time to redo that presentation. So if you're interested in that, or you haven't watched it and you want to watch it, the 8 trends, I feel like it's probably time for me to redo that whole presentation. Because again, Ray Kurzweil and Peter Diamandis are the 2 founders of Singularity University, and I've been talking about this for over a decade now, and I find it fascinating how it's all coming to fruition. So now let's go into, what is the signal and what is happening below the noise. So most organizations are using AI somewhere. The awareness is there, the experimentation is there, but the scaled value is still rare. This tells us something important. The gap is not whether people have heard about AI, the gap is execution. Many companies have the tools, but very few have actually redesigned their work. Many people have played with prompts, but very few know how to build operating rhythms. Many executives talk about AI, but very few have created accountability around it. And this is what matters for us as leaders. As business owners, as investors, we shouldn't be asking, is AI interesting? We should be asking, where does AI create measurable value, and how do we build capability to actually go out and capture it? You can see here the percentages. 88% of surveyed organizations say that they use AI regularly. 62% are experimenting with AI agents, and 1/3 say they've begun scaling across AI within the enterprise. But the whole thing is around execution. Now, we've spoken today already about the infrastructure, but one of the most important shifts with AI is actually the physical infrastructure, because behind every single prompt is compute. Behind every compute is chips. So remember, compute is computing power. Behind the chips are data centers, and behind data centers are electricity, cooling, land, capital, regulation, and supply chain. This is where AI is no longer just a software story. It's an infrastructure story, it's an energy story, it's a real estate story, and it's a capital allocation story. The largest technology companies are spending hundreds of billions on data centers, and this is ultimately where we have to pay attention. For investors, it means the opportunity is set broader than the obvious AI names. The real question comes, where in the value chain is it durable? Where can we find value in the value chain, and where's it being created? And what is the market simply, what the market's paying attention to the excitement, but where does actually the opportunity lie? I know that a number of you invested alongside me in a data center in 6 data centers to be exact, back in October. I hope you saw the update that we did a week or 2 ago, because there's been significant value already created in that process. And there's massive CapEx investment going into the whole AI space, specifically data centers and specifically power in terms of the whole infrastructure. Now, every super trend has 2 truths. The technology is transformational, and yet also investors can lose money. And so one of the most important principles when it comes to investing is you can be right about the future, but you can be wrong about the price. And it's so interesting because Anthony hasn't seen the presentation that I'm doing now. And I mean, that's what I took away as one of his massive things that he said to all of us. We've got to be clear on not is the company a good company, but does the valuation actually make sense? The internet changed the world, but many investors lost a lot of money in the dot-com bubble because they bought the narrative. They bought into like, is the internet changing the world? But they didn't respect the valuation, the business models, the cash flow, and the timing. AI, most importantly, the thing that's different about it is that it's increasing productivity. And it's one of the biggest wealth shifts of our lifetime. But it does not mean that every AI company is a good investment. The discipline is to own the trend intelligently without buying into every story, with looking at every IPO and understanding the market valuations rather than just the fact that it's got AI sort of attached to it. So in terms of the value chain, the AI value chain is far bigger than just the AI stocks. So at the bottom of the stack, you've got power and land. Without electricity and sites, there's no data center that can be built out. Then you have the chips and compute. This is the cloud and the data. These are the models and the agents. These are the applications and the workflows. Then there's security and governance. And finally, the investors focus on the investable headline names. But the serious investor needs to ask better questions. So where is the bottleneck? Where is the pricing power? Where is the durable margin? And where is the just risk-adjusted return? Some of the best investments are not the company everyone's talking about. It's the infrastructure, the picks and shovels, the enabling layer that is allowing the diversified exposure without actually, actually involving in the headline names. So what do we need to look at? Now, Anthony's pretty much taken us through this already. So AI is clearly one of the most important investment themes of our lifetime, but price still matters. Many investors can see the opportunity, but they're not clear on how to gain exposure sensibly. They do not know whether they should be thinking about public markets, private markets, IPOs, infrastructure, data centers, energy, chips, software, or cybersecurity. So we wanted to help separate out the super trend from the securities. And how should investors think about AI exposure without overpaying, over-concentrating, or chasing hype? And that was the whole sort of feedback that I gave to Anthony. So why is this conversation urgent? Well, the thing is that it's now moving from the private market. So with the SpaceX IPO, it's gone from the private market story to the public market test. We're going to see major companies looking to IPO, large capital raises, and enormous valuation targets. The question changes. Is it no longer only, is this company exciting? A better question is, what is the business model? What are the unit economics? What is the CapEx requirement? What is the margin structure? And what price am I paying for future growth? I found it fascinating what Anthony said about the fact that based on current earnings, SpaceX would take somewhere between 90 to 100 years to earn back based on revenue. And then he said that had clawed back to about 45 years, which is still a long time. I mean, 45 years is a hell of a long time. In the next phase, the market will not only reward user growth or narrative, it'll increasingly ask who can convert AI usage into durable economics, like how do they actually make revenue? This is where the discipline matters. The opportunity may be enormous, but the price still determines the return. And it is interesting here, this tokens over users. So, if you've used Claude, it talks a lot about tokens, okay? And if you consider a token, like I, Scott Picken, am a user, so I use Claude, I pay $20 a month. But whenever I run out of, it only has a certain number of tokens, which basically means I'm only allowed to use a certain amount. When the moment I run out of that, I have to buy more tokens. So it has my credit card, and whenever I want to do more work, it just adds more money to my credit card. Okay, so ChatGPT might sell with the whole idea of one user, Scott Picken, pays his $20 a month, but ChatGPT makes no further money out of me, whereas Claude charges me $20 a month. but every time I use it more extensively, it charges me more for tokens. Okay, that's why this whole tokens over users becomes more important in terms of this process. We've been through these 5 questions that I asked Anthony to prepare. And so the next phase that I wanted to move on to was, what do you actually do about it? How do you be a leader in the space? Now, Judy Sinansky is one of our mastermind members. She kindly introduced me to this book back, I don't even remember now, May last year. And she actually did a live session, which, if you want me to go and find the session, I can find it. It is in our recordings. It's just right in there, AI-driven leader, where she did a presentation for us on the principles of this book, the AI-driven leader. I would strongly recommend reading this book. It's kind of written for 45-year-olds plus that want to understand, how do you take current business, how do you implement it with AI? And it's really when it opened up my eyes in terms of this process. So I want to kind of take us to move from the investor lens to the leadership lens, because most people are looking at AI from the outside as observers, but as business owners and as corporate execs, we don't have that luxury. So if you own or lead a business, your job is no longer to watch AI. Your job is to actually lead the intelligent adoption. This does not mean that you need to go out and chase every tool. It means you need to understand where AI can significantly improve the quality of your thinking, increase your productivity, reduce your bottlenecks, and create new value for your clients. The companies that will benefit from AI will not be the ones that merely talk about it. They'll be the ones that actually completely change the way that they work. And again, this book, The AI-Driven Leader, is a great book, and it's got a great resource tool. So if you want the resource tool and you want the presentation, just type in the chat box AI-Driven Leader, and then I'll know, and I'll share it with people for you. But I strongly recommend reading this book. Now, let me just give you some of the principles from the book. AI is not the goal. Strategy is the goal. One of the most important mindset shifts for leaders is, if you start with technology, you're literally going to chase the tools. But if you start with the outcome, you're going to build leverage. Now, again, I teach you this all the time. Start with the outcome. Outcome. What do you actually want to achieve? The question is not which AI tool should we use. The better question you should be asking is, what are we trying to improve? Are we trying to improve the client experience, the decision quality, the speed, the cost, the communication, the reporting, the sales, the operations, or the leadership? Once the strategic outcome is clear, technology becomes useful. AI should serve the business, the wealth plan, and the leadership agenda. It shouldn't just be another shiny distraction looking for a problem. So let's take the 4 principles of how to do serious AI adoption. The first is augmentation over replacement. So start with better thinking, better workflows, better client outcomes, not fear-based headcount reduction. So you want to basically take the business and you want to take your current employees, and you want to say, here, let me teach you how to use AI. Let's use this automation. Let's look and get much better productivity. The second is dynamic accountability. So AI can support work, but humans must still own the standards, judgment, and financial decisions. So he talks a lot about in this book, how do you bring in AI accountability within the business so that you're enhancing AI adoption, and it's not seen as a fear thing, it's seen as a productivity tool. The third is psychological safety. People need permission to experiment, learn, make mistakes, and share what works. So I find it fascinating in our company how we've just embraced AI. Different people have gone out and done different codes and built different tools and everything else. But people need to know that they're part of the team and that they can go and try stuff. They can, there's got to be budgets to be able to do it so that they can go and experiment in terms of it. And the fourth is they need radical transparency. There must be clear rules, clear use cases, clear ownership, and clear disclosure of where it matters. The leader's job is to lower fear and to raise standards. So again, lower fear and raise standards. And that's the whole balance around this AI adoption. So everyone will not adopt AI at the same speed. So I know that Jaco is part of a much bigger business. In our business, people have embraced it, significantly. But in a bigger corporate environment, it doesn't happen at the same speed. And this is critical. Every organization, you're going to have the innovators, the early adopters, the early majority, the late majority, and the laggards. If you try to force everyone to change at the same speed, you're going to create resistance and confusion. The smart approach is to start with champions. So God, like someone like in our company, Alex, has been a complete champion, jumped in, taught himself all the different products and the codes, and is literally doing everything. And it's been incredible to watch. Once people are seeing what he's doing, then they become curious, capable, influential, and willing to experiment. But you need to build the proof. You need to show small wins, and you need to show the rest of the team what is actually possible. Once you've done that, you can then scale. AI adoption is not only technology projects, it's actually a change management project. You literally are fundamentally shifting how people think in terms of the overall process. Now, the 4 drivers that you want to look at for AI-enabled growth. So the first one is strategy, the second one is execution, the third one is people, and the fourth is technology. So strategy starts with, will AI strengthen our competitive advantage? So how can we use AI to, so like Garth and Jaco and myself, so Garth coming from Calio Capital, the family office, and ourselves are fundamentally looking at the entire business model and how can we adapt and change the entire business model as a competitive advantage to enable people to ultimately get the outcome. You know, financially in the wealth space, people just want to get results. How can we use AI to dramatically enhance that for people and also empower everybody to invest like the top 1%, so increase the distribution base? Second question, execution. Which workflows can be redesigned for speed, quality, and leverage? So, you know, something, again, that we work with Calio, where they were very traditional in a manual process, and it's constantly, how can we make this far better in terms of, you know, from an execution, scaling, automation perspective? The third is that people should ask, you know, who must be trained, empowered, and held accountable? You know, so when you ask that from a people perspective, it's how can we improve this? Whereas if you ask it from a technology perspective, people say, you know, what tools do we need? What data, what governance are required? But that's not what you should be asking. You need to, you know, if you focus on it from a technology perspective, it's just a distraction. What leaders need to do is we need to move away from people just randomly experimenting, and we need to bring it together in how can we actually connect it to enhance the business, to be able to add more value within the business, and to build the engine within the business. And that's where the real sort of opportunity lies. So it moves from strategy to execution to people, and then ultimately to technology. And unfortunately, most people are getting this the wrong way around. They start with technology, and they don't start with strategy first. Okay, so how does it actually practically create value within a business? The first is that it can increase employee productivity. So better output from capable people through writing, thinking, research, analysis, communication, planning. It's phenomenal. I don't understand any of you that aren't using AI. I honestly don't know how you live anymore. Like I use AI for literally everything. Second, it can improve your operational efficiency. So less manual work, fewer bottlenecks, faster reporting, better process flows. Thirdly, it can help create new products and services. So new client experiences, advisory models, personalized education, and scalable expertise. So exactly what we just said here, you know, at a mastermind level with the Calio team, we've only been able to share this information and access to the partners with people that have been able to join at a mastermind level. But using AI, you could, and by the way, there'll always be people like you and me that want to be able to have the human interaction, but there's people that can't afford that. Well, there's an entire distribution base below that that would like access to the same expertise, the same information. They won't have the human one-to-one, but they can all be built into models in terms of the process. If an AI initiative does not do one of these 3 things, you need to question it. So, you know, that's how you get out of the drama and the story. So one of it, in simple terms, does it increase productivity? Does it increase operational efficiency? And ultimately, can it create new products and services? Basically, in simple terms, can it create new value? The question is not whether something looks impressive. The question is, can it create measurable value? And then finally, the last part that I want to share with you, the AI wealth architecture. Now, with regards to our mastermind, this is something that I'm getting very, very excited about and that we're working extensively with the Calio team on. So, you know, and I do think this is the most relevant to the private wealth global community. You see, because AI is not just a business tool, it can become a decision-making system for your wealth. So as investors, we want to be able to think clearer, ask better questions, prepare better for advisors, and identify the blind spots before they become too expensive. So the most important distinction is AI should never replace our judgment. The fundamentals of business, the fundamentals of investing, the fundamentals of wealth, they're not going to change. But it can upgrade the quality of our conversation to enable us to make better decisions. And that's where the real opportunity actually comes through. So most of our wealth problems are not investment problems. They are coordination, clarity, and decision quality only. Most successful people own many things. So they have businesses, property, pensions, shares, offshore structures, insurance, private deals, advisors, family obligations, so much pressure on their time. But they don't often have it all in one full picture. Simple things like a dashboard or an AUM, an asset income model, which is your plan till you're 100, or your tax and structuring all under one picture. You'll be amazed how many people join us at the mastermind level and they've got stuff distributed all over the place and it's scattered and it doesn't work together. And then they come and they meet with ourselves and the Calio team and they get one full picture. You can have an excellent set of instruments, but without the conductor in a band, you do not have the symphony. You just got a bunch of noise. And so what we're trying to do at Private Wealth Global is it's about being the architect of the wealth. It's about bringing it all together in one plan. And AI can actually help you with that organization. It can help you to ask better questions, and ultimately it can help you create the rhythm. So the rhythm that Anthony and I try and run on a monthly basis, on a quarterly basis, and on an annual basis, that is the architecture that they've been using at the family office that's literally for hundreds of years at a family office for the top 1%. And now we're using that same architecture and that same rhythm for you and I. And ultimately, we're now creating the tools to enable that in terms of that process. So there's 6 different layers that a wealth operating system has. The first is purpose. So why is this wealth actually being created? And I always start with the outcome. What is your big picture? What are you trying to do and why? The second is the inventory. So what do you actually own? Again, we do a health check. So where are you at? What do you currently have? Your pension, your property, your plans, etc. And where is it? What is your tax? What is your structuring? The third is your exposure. What is your exposure by country, currency, asset class, partner, time horizon? So we talk about the diversification 5.0. The fourth is risk. What could go wrong? Where are you fragile? Where are you exposed? The fifth is opportunity. What deserves deeper due diligence? If you're looking at something new, we've been talking about AI or crypto and a couple other things today. What would actually look at that from a due diligence perspective? And the fourth is decisions. How do we actually decide? So we've got a plan, the asset income model, but how do we make a decision whether we should invest in this or this, etc.? And ultimately, who owns that decision? And then, the big difference ultimately comes down to the difference between your information and your governance. So how do you actually operate the rhythms, the plans, and the execution? So AI can be very, very useful for all of you now, because a lot of you already within the mastermind, you've already got your asset income model. You've already got your Enneagram and wealth, or what they call the wealth EQ. So you've got a whole bunch of things. You've got all of the information that Anthony's told you in terms of what you should or shouldn't do. So in terms of your inputs, you've actually got all your inputs there, but you can literally build it so that you've got all the answers sitting in your pocket, so you can build the dashboards, you can get the plan. And that's where, for me, it becomes really, really exciting. So, AI can literally help you move from, being able to, so at the moment you've got the family office, which is fantastic. That's never going to change. But now how can you take all of that understanding and put it into the system so that it works for you on a daily basis, on a weekly basis, on a monthly basis? So it can help you summarize the documents, compare the options, map exposure, generate questions, stress test assumptions, and even prepare for when you have the meetings. Becomes extremely valuable. AI can never replace your regulated advice, and I don't think any of you, including me, want to replace our regulated advice, but it can replace the fiduciary judgment. it can help us with proper due diligence, legal structuring, tax advice, and emotional discipline accountability. Like if you understand the Enneagram, and specifically if you understand the Enneagram and wealth and the wealth EQ, and you're one of 27 investors, it can help you make far better decisions for who you are. It can train you habits, etc., etc. So the way to use AI is to not predict markets and to try and tell you what to buy. The better way to do it is to help you with preparation, sharpening your questions, and highlighting what you're not seeing. So again, like some of your behavioral ways that you behave around money and investing, what are you not seeing and how could you do that better? AI should improve the conversation before it improves the decision. Now, I'm going to give you some of these. I'm going to put these prompts in to the WhatsApp group, just so that you've all got them. And if you're watching the recording, I'll put them below here. But you can see that there's a number of prompts that you can put in where investors can go and map out and look at their risks. And it's actually really fascinating when you put in the work that the Calio team's already done, and you can ask these questions and basically see what is happening. And if you're not involved, I know at this level it's all the mastermind members, but if you don't have a family office that's giving you the holistic view, most people just have a bunch of financial advisors, etc., all over the place, and it can go and heat map and say, like, right, where is the exposure? This is what we call the health check. The next thing you can do is you can stress test an opportunity. So you can go in. So if you take, I'll give you an example here. So if we go through, and if you use the Wealth Migrate GID system, so we've got the GID system, and I'm not giving you a course today on how to do this, but I mean, I've got my habit tracker where I do everything now. So my monthly mastermind review and everything else. But the one I wanted to show you was where's it gone now? Wealth Migrate. So if I go and review any of our systems, I've got all of our stuff here. So the book I wrote with Clem Santa, everything around how do we do GIDS, the Global Investment Due Diligence System, our due diligence checklist, everything, it's all in here. So whenever I review a project now, what used to take weeks, sometimes even months, to go and do due diligence, it now knows everything that it needs to look for to be able to go and give me a full due diligence report on any kind of deal that I'm given, and obviously we get given deals all the time, and it allows us to go and check it out in terms of that process. Preparing for a meeting, whether it's Calio or an advisor conversation, you can literally put in the quality of questions. It can review where you're at. It can review your current situation. What should you be asking so that you're arriving to be able to ask more intelligent, informed conversations, which is going to make it so much better for you. And, and being able to put it in plain English so that you can understand what's going on in terms of the overall process. Now, again, at a mastermind level, I know that the majority of you have had a wonderful experience with Calio. And so this is not trying to usurp them or trip them up. But what this is doing at a holistic global level is it's showing people and teaching people how to ask better and more intelligent questions around their investments, their money, and their wealth, so that we no longer, and I'm not talking with Calio, I'm talking just general financial industry, where we just pay the fees, where we don't even really know what we're getting. And then finally, in terms of whenever you're asking a prompt, just a reminder, and again, I don't want to go into an AI course here, but remember that you always want to kind of put down what is the role. So who are you asking AI to be? So, you might say, well, act like Warren Buffett and analyze this deal, and, or act like my family office and review what is going on here. The context, what does it need to know? So what is the question that you're trying to ask? The format, how should I actually present the answer? So what do you want? Do you want a one-page report? Do you want a port filled with all the fundamentals, etc.? What is the standard? So what is the quality? Ideally, if you've got a good quality report, you can show it. Like, hey, this is what great looks like in terms of the standard. And then one more instruction. You start using AI to ask you questions. So if you just push it, then you're doing all the hard work. But if you pull from it, then it's doing the hard work. So I always say, ask me one question at a time, and it then asks you these intelligent questions. and it actually helps you, really, really frame, how you do this, and it's amazing. It's like having a life coach, a business coach, and your wealth coach all in one, asking you incredible questions. So you don't want generic answers. You want a partner that can actually work with you. And again, if you've done the Wealth Accelerator with us, and if you haven't, I strongly recommend you should. But you learn how to put all of these pieces of the puzzle in so that it personally knows you. It knows what your goals are, it knows what your asset income model is, it knows what your wealth EQ is, so that it can help you make more intelligent decisions. Okay, so finally, how do we move from awareness to implementation? The biggest insight is useful, but implementation is where, so you all understand what's going on with AI now, arguably, but now how do you actually implement it? And the real wealth advantage is when AI actually becomes your operating system. So I just remind you, with an operating system, where's my phone gone? Here we are. So, this phone runs on an operating system. My laptop runs an operating system. My iPad runs an operating system. My brain runs on an operating system. So how do you take the AI and actually turn it into an operating system so that you're not just randomly using it, you actually, knows exactly who you are and helps you implement. So this is the rhythms. And ultimately, you want to input the rhythm for your wealth. You want to prepare for the advisor conversations. You want to be reviewing the risks, and you want to be documenting all of your decisions. And this is where AI can become a serious wealth tool. The goal is not to use AI more. The goal is to make better decisions more consistently and to get better results. So what are we doing at AI Wealth? So in the month of, what are we in now? June. In the month of July, we're going to be doing AI Wealth. So remember that in May, we did AI Life. In June, we're doing AI Business. And in July, we're doing AI Wealth. Now, because you're part of the Mastermind, and because you've already done what you're doing with Calio in terms of the wealth EQ and the AIM, etc., we're going to allow you to be able to join just for the module of AI Wealth. Because you've already got the tools, we want to show you how to put it in so that you can actually utilize it properly. So this is, not to actually help you try to predict markets. This is to help you think better about your wealth, organize your financial world better, make decisions with discipline, perspective, and using the family office intelligence you've already got. So this is the structure. In week 1, we're going to help you build your wealth clone. So AI understands your goals, your current position, your investor psychology, your assets, your concerns, and your decision context. Okay. In week 2, we're going to improve your decision quality by looking at your wealth EQ, your behavioral blind spots, your assumptions, and your decision prompts. In week 3, we're going to help you analyze your opportunities like the family office. So it's where you'll summarize all your documents, you're comparing options, you're interrogating risk, and preparing. So we're going to basically teach you how to put everything into one place so that it can run like an operating system. And then 4th, we're going to help you build your personal family office dashboard so that there's repeatable rhythm, clear actions, and a 90-day wealth plan. So it takes everything you're doing with the Calio team, and obviously this is in collaboration with the Calio team. It puts it into the AI so that it becomes your AI wealth operating system. So the real opportunity is that you want to basically build your operating system so that it can help you make better decisions, and it can, and ultimately it can create activation systems to get better results. So that's week 1, week 2, week 3, and week 4 in terms of that process. Inside AI Wealth, every module has to produce a real asset. So it's not theory. So in module 1, it's the wealth DNA. We clarify the goals, structures, assets, risks, concerns, and decisions. In module 2, it's wealth behavior. So it's the patterns, assumptions, blind spots, and that shape your financial decisions. In module 3, it's opportunity analysis. So you use AI to interrogate opportunities, compare options, and prepare better advisor questions. And in module 4, it's the operating system, the wealth operating system. We create the review cadence, the dashboard prompts, and the 90-day action plan. The outcome is better organized information, better questions, and ultimately better outcomes and results in terms of where we're at. So I just wanted to let you know about this. All of you already, are part of the Mastermind. And if you're interested, you can just type in there AI Wealth, and we can see, how we can get you involved in this. What is it for? What is it? It's a private AI wealth project. It's a clearer way to organize your financial world. It's a tool for better decision-making and better preparation. It's a family office style decision-making support layer. So again, it's an integration with Calio. We're helping build this together. And it's a bridge into deeper advisory and investment decisions. What is it not? It's not regulated financial advice. It's not buy, sell, hold instructions. It's not stock picking. It's not tax or legal advice. And it's not AI pretending to predict markets in terms of that overall process. The promise is not certainty. The promise is better thinking, better preparation, and better decision quality. And then finally, we're not asking people to outsource their thinking. We're asking you to upgrade it. And this is the central message across everything we're trying to share. AI will not make, just because it's AI will not make it safe. You need to be able to fix poor judgment, bad incentives, emotional investing, and lack of discipline. That's why we've had Anthony explain the whole thing around the AI space. But what it can do is it can help you make far more disciplined and better decisions, faster, clearer, and more scalable. The future belongs to investors and leaders who can combine the human judgment with the intelligent leverage of AI. So this is the opportunity, not to become dependent on AI and not to be intimidated by AI, but to use AI as your strategic thought partner to build your serious wealth architecture. And this is ultimately how we're going to stay human, stay disciplined, and stay ahead of the curve. And the final thing I wanted to share with you, which is something I got shared with a couple of days ago for me, is that this AI thing can feel super overwhelming for everybody. And it feels like putting this massive rock into a little jar. And, what about if we just put in one little pebble a day and take small steps every single day? And you're part of this mastermind. We've endeavored today between Anthony and us to try and unbundle this whole AI confusion around the IPOs and the big picture and what should we be doing. We haven't done it from a how do you use AI tool perspective. We've tried to take the big picture, the super trend, and as part of the mastermind members go, what do we do with it? How do we actually change? And I think the most important thing, and I come back to this little picture here, is just realizing that AI is a super trend and it's happening with or without us. And people like myself and our team with Yaku, et cetera, and the Calio team can hold your hand and walk you through on this journey. I don't think at a mastermind level it's ever going to change in terms of, or certainly not in our generation and possibly a few generations to come, where when we're dealing with our wealth, we're still going to want to have Anthony helping us make the right decisions and Garth and the team that is there. But I can tell you what is going to dramatically change is where we take the information that they help build for us, our asset income models, our wealth EQ, et cetera, putting all into an operating system and allow each and every one of us to be far more intelligent, to make far better decisions, to stress test our own human assumptions and mistakes that we generally make, and most importantly, to get far better results in building our wealth architecture. So that's all for me. You can see that I'm truly excited about the AI space and where it's all going. I've tried my best to unbundle the super trend for you, obviously with a lot of help from Anthony as well in terms of where this is going. If you would like to understand how we're going to take this forward and take everything that you've already got within the mastermind and what you're doing with Calio and put it into an AI wealth operating system, then you can just, either fill in the survey, type in AI wealth or reach out to Shanika, and we'll look to, get you included in July when we do it, because we're specifically focusing on the wealth module in July. And don't know if there's any questions, if there's anything I can help with here on anyone in terms of it. So I can see there's lots for AI-driven leader and the 8 trends. I'll go back and I'll make sure that I answer that. Are there any questions or anything that I can help with in terms of the... So just for Bethany, I always record every session, so you can always go back and watch it. And just to show everyone quickly where those recordings always are. So if I go here and you go to the mastermind, so if you just go down to the classroom, and you can see here the very first thing is monthly recordings. And I always go backwards. So you can see there's the market update for May, and then the Germany deal is there. And by the way, if you were bored, you could go all the way back to 2022. But anyway, all the recordings are always here, that we always put the recordings up in terms of that process. Okay. Any other questions around the AI space? Cool. Yeah, I'll put them into the okay, I'll put that for the recordings. I will put all the recordings, I will put all the links, Bethany, into the WhatsApp group as well. But here it is in the chat as well, so that you've got it. Okay. Right. Anything else? Let's pivot back quickly, because I'm actually live on stage in 16 minutes with our AI wealth. But let me just go quickly. I just want to go here very quickly. And we always play a little game. So let me share my screen here. What did you think of today's session? So we always a couple of words, and let's have some fun. 1 or 2 words about today's session. And 3, 2, 1, go for it. I'm always interested to see what people thought. I hope we haven't overwhelmed you too much around the AI space. It's very difficult to unbundle the entire thing, but Anthony and I really endeavored to try and give you an overall context around what is happening, and more importantly, what do we do about it as people, in our own lives, as business owners and business, corporate execs, and then also as investors, what do we actually do with it? And so I can see there's lots of information coming through. Okay, awesome. Let me pivot finally then to just some admin in terms of to finish off. So again, the different levels, you've got the core, the 10x Elite, and the legacy. This 10x Elite is where we on a monthly basis, we're implementing all of the AI stuff, obviously Amy and all the stuff around legacy and everything else, and also working closely with Anthony and Garth with regards to people's asset income models. If you do want to go and read about it, we can share the breakdown of that. And I've already shared with you, the next module is AI wealth, and I'd strongly recommend you join us for that. And by the way, there is a discount for Mastermind members. I always ask you this question around whether you're ready to change your identity and step out of your comfort zone. You've already joined the Mastermind. So my job is always to drag you out of your comfort zone, because this is where I believe the magic, delivers. And just a couple of things to be aware of. It's always useful to have an accountability partner. So you turn up, to step 7 with myself, and let's use me as your accountability partner, or find someone else. But you have to have an accountability partner to be able to check in on a monthly basis to get measurable progress. By the way, I'm now building an accountability partner using AI as a daily habit tracker, as a weekly habit tracker, and as a monthly habit tracker. And I'm going to be the guinea pig, but we're going to build those tools to provide you so that you've got an accountability partner. In terms of collaboration, tonight we're going to be talking about AI wealth. So remember that the social session, which we call the Fireside Chat, is at 8 p.m. SAST. So that's effectively in 8 hours and 14 minutes. And we'll be going more into AI wealth. I'll be sharing some of the stuff that I'm doing personally around it. Then the Wealth Weekend, the next one is the 14th to the 18th of October. And the Personal Development Workshop is the 18th to the 20th of October. We do it together so I would strongly recommend coming in person. And if you can't come in person, then we do record it. Well, not record it, we stream it as well. Okay. I think we've been through this. I'm not going to go through all these details. Yeah, just in terms of the WhatsApp groups, the Wealth University channel is kind of generic it's the free channel. The Wealth Migrate channel is for investors and investor updates. The Wealth Hackers is kind of where I tend to put motivational stuff and information. And then Private Wealth Global Mastermind is just for the Mastermind, and we try to keep it just for Mastermind material. You do have Business Mastery. Always go and look, in here, in the resources, in the classroom here. There's a whole bunch of things you've got here. You've got the Wealth Transformation Pack. You've got Wealth Going Global. You've got Asset Class Mastery. You've got the Family Legacy Bridge, Effective Tax and Structuring, the Business Mastery, which is Tony Robbins. There's a lot of value in here, probably too much for people to actually keep up to date. The next 10x Elite session is next Wednesday. So it's the 24th of June. So always the last Wednesday of every month. And it just happens to be the 24th, where we'll be doing fourth month, I think is correct. And then that's the contact details of Shanika and Alex. Next month is gold and silver. So we'll be doing gold and silver as the asset class next month. And then finally, under general, I just wanted to share something with you. I have shared with you Amy's reports already with the family legacy. So I'll share that, which comes as part of 10x Elite. But I'll share the report on the WhatsApp group just so you can take a look at the generic report. And the other thing I wanted to share was that Joy and I recently did an Enneagram and relationship, which is really, really interesting. So let me just share this with you quickly. So any of you that are in a relationship, check out this report. So I got a 46-page report where it pairs you together with your partner, what it actually means, and it's incredible, like all around business, investment, money, relationships, everything. So yeah, just letting you know that Bianca and them can actually do that for you as well. And then finally, again, to remind you that tonight we're going to be reviewing the chat. So that is everything for today. I know it's a much longer session. Apologies, it doesn't normally go this long. I don't have time to do accountability now because I literally have to pivot. I'm live on stage in 10 minutes. But if anyone wants to do accountability, we can do it tonight at the fireside chat, or you could just send me a voice note, and we can basically help you with that. And if there's no questions, then I think I'm going to call it. Sorry, it's a much longer session. It's not normally as long as this. But between Anthony and I, we've tried to add as much value as possible. The fireside chat, Bethany, is in 8 hours. So it literally starts in 8 hours and 10 minutes. Cool. Okay, everyone. Have a wonderful day, and we will see you later. Come join us in the fireside chat later where we can have a catch up. Have a good one. Cheers, cheers.